What's up everyone, welcome to the channel. In this video you will find a lot of free education. Make sure to subscribe because every week I share some free education here on my YouTube channel. Now, as you know, I'm mainly a smart money trader. My strategies are based on smart money, but we need to talk about it for a second. Smart money has great concepts, but at the same time, as you know, 90% of traders are still losing money, and you might wonder why they're still losing money. Of course, psychology has a role in this, but also I will say that smart money by itself is not something that makes you profitable. The concepts are great, but by itself they don't make you profitable. Actually, constructing and developing a system that works and has an edge on the market is what really makes the difference. I hope that you can really find the informations that you need in order to become successful just by looking at my free channel, but at the same time, in the description below you can find the links to actually join my course. My course, both the 1.0 and also the 2.0, is included with any membership from the monthly all the way to the lifetime, or also there is the option to have some one-on-one lessons. So make sure to check my website, and then I'll see you on the video.
Oh, nice. Let's see. Actually, width below it, which is something that I don't really like seeing. Here we are reaching supply. Reaching a supply area after waiting below the demand, which is a sign of weakness for demand. Of course, we can go higher. There is a huge imbalance here. We can easily go higher. I will enter this setup only if I see 5 minutes confirmation, and it must be a really good confirmation because I won't just enter randomly. KGPY going to the upside. Not many opportunities right now, actually, according to what I like to see. Many pairs just trending here. Let me see on lower time frames what happened here. Here I don't have any type of confirmation that we will continue bullish. And also it's not our favorite setup because we have only imbalance and order block for now. If this becomes liquidity, then good. If not, this is not the setup that we want. It is an F setup. Why? Because it is only order block and where is it? Order block and imbalance. Order block and imbalance. If we don't have any liquidity, previous high, lows, or anything, it's an F setup. ADUSD looking interesting at both zones, actually here because we're building some liquidity, or higher because it will be an A setup. USD, of course, dropping after having a London manipulation and manipulating our order block that we were referring to, which again, this was my mistake. I usually don't want to take the obvious order block, and I want to look at the higher one in order for my setup to become an A setup. So this becomes liquidity, and I know that on my pictures, on my setups, on my trades that go to take profit or go well, this is usually what you see, just like GPY. GPY, we didn't take this order block, which would be like the most obvious one. We took the higher one, so all these highs become liquidity. We should have done the same on USD, but that's my mistake. As I seen some confirmation was pretty confident we were not coming back up again. I mean, we were not coming back down again, and we just continue up. And I considered this as a failure of a failure of supply in order to create demand and continue to the upside. But didn't see that we had a usual setup that I like to trade here. Can you do more video explaining WYCKOFF? No, because I don't use WYCKOFF that way. I explained WYCKOFF, I tell you about WYCKOFF, but I don't use WYCKOFF that way. I said it many times. If you like to use WYCKOFF, honestly, it's good to understand some movements of the market, but if you like to name all the little movements, and then sometimes you have you have only one manipulation, sometimes you have two, and so on and so on. And you look at all the little movements and you name them, and you like bank climbers, automatic rally, secondary test, uptrust, sign of weakness, and so on. That's not really what I'm interested in. What you need to look at for confirmation is just the type of confirmations that we talked about in the 2.0 course. I will do a more in-depth video. So what is missing for the 2.0 course is a more in-depth video about entry types, examples, and putting everything together. And also I won't write it, but everything that I noticed during my backtesting hours, so you can already refine your entries and everything. Anyway, WYCKOFF is you're basically naming every single move, you're paying attention for every single move, while what you care about is seeing just our entry confirmation, which is building liquidity, usually either this way or other ways, grab of that liquidity, a change of direction, and a continuation to the downside, looking at a premium or discounted, if it is vice versa, area where there is also supply. So doesn't really matter to look at all the WYCKOFF little movements if you know what you're looking at, if you know how the market moves. WYCKOFF is just a way for people to not understand really in depth what's going on, and just to name randomly the little movements just because they are told that they are called that way. So if someone tells you that this is bank climbers, this is automatic rally, this is secondary test, this is uptrust, and so on, you will just do that because you are told so. But what we are doing right here is actually understanding how the market is moving. We see that we are creating a consolidation. We see that this consolidation needs to be grabbed with liquidity. Maybe up here we have a supply. We reach supply after grabbing the liquidity. And then what we want to see is a confirmation that after grab of liquidity, that this is not just a break structure to the upside to retrace to a demand and continue to the upside, but this is actually a manipulation to then change direction and continue to the downside. But this is more of the market. It's not really just naming all the little movements. Can you please show the way? Could you explain what the previous highs and lows on the setups are? What are we looking at exactly? Can you explain what the previous highs and lows on the setups are? They are previous highs and lows. So I will also do another video on this, but this is a previous high. Let's see GPY setup. These are previous highs. Also look at the liquidity videos. Liquidity video, liquidity PDF file, so you understand what liquidity is. So previous highs here, where we have consolidation, where we have previous highs and so on. These are basically areas that will be and could be manipulated. And this, now I will explain why this is very important, because the market needs fuel to move. So if we just trade this area, in this area there's nothing, there is just an order block and there is imbalance, that's it. And this is not the setup that we want to trade because it's an F setup. Okay, we reach this area and there is no previous high, there is no anything. So how the market can grab liquidity to actually move to the opposite way? It can't. While here you have previous highs here, so we are manipulating something, we are grabbing some liquidity because there are many stop losses above these levels, and there are also many stop losses because people are trading this area with stop loss above it. We grab the liquidity, we reach the area, and then we move to the opposite way. So previous highs are fundamental. Same thing for USD today, that was my mistake. This, if we just trade this area, where are we grabbing liquidity? Nowhere. Well, up here, but that was my mistake again. Anyway, we grab previous high liquidity by a few pips, but we do, and then we continue to the downside.